in this industry really doesn't have a whole lot of research happening, and it's a shame, but that's where we are right now. Now, the guys at Nesta have produced, this is their second research report. It's an in-depth, I don't know, is it 80 plus pages of research about this industry. It's only just got released a week ago, and so it gives me great pleasure to introduce Bryan Zhang from the University of Cambridge and talk about the new Nesta report.
Right. Good evening. I think it's somewhat fitting that Radian opened the conference this morning with the lessons from the French Revolution. And hopefully I will end the conference by providing you with some data that hopefully will reflect the voice of the people. So I'm a researcher in crowdfunding and P2P lending at Cambridge. I was part of a team that produced the Rise of Future Finance benchmarking report last year. And as Peter said, our latest industry report was launched last week. I think both reports really highlight the phenomenal rise of the peer-to-peer lending industry in the UK. For example, in this year, we're predicting the total volume of alternative finance in the UK will be 1.74 billion pounds. And P2P lending, which includes peer-to-peer consumer lending, business lending, and invoice trading, will account for 90% of that market. So thanks to the support of those leading platforms and the Peer-to-Peer Finance Association and UK Crowdfunding Association, we are able to collect data worth over £1 billion of transactions. And those data shows the market is fundamentally strong. For example, in terms of peer-to-peer business lending, the average interest rate is about 8.8%. On average, it takes about 796 micro-transactions to fund one business loan, which shows the activities of retail investors in this market. Lenders are definitely diversifying. So the median number of loans invested in a typical business loan is 52. And in terms of peer-to-peer consumer lending, the platform acceptance rate is low at 10%. That means 9 out of 10 people who applied for consumer loan will be rejected, which demonstrates a quite strong, robust, and stringent credit check and risk modeling process. And the average weighted default rate is low, less than 1%. And by less than 1%, I mean it's more like 60 to 70 base points. So that's extremely low. And in terms of invoice trading, the average invoice trading duration for auction on Market Invoice or Platform Black is only 8 hours. And typically, it takes only 7 microtransactions to fund one invoice trading. And that shows the activity of high net worth individuals, family offices, and high net worth and institutional investors in that space. So, but I think beyond the numbers, beyond the data, we have to try to hear the voice of the people, understand their motivations, as well as decode their behaviors on the platforms. So to that end, the Cambridge and Nesta have come together to conduct the largest survey ever done on peer-to-peer lending market. Now, for peer-to-peer consumer lending, we surveyed over 10,000 individual lenders and borrowers. And for peer-to-peer business lending, we surveyed over 300 SMEs, as well as 1,700 individual lenders. Also, in partnership with the PwC and ACCA, we commissioned 2 national polls, one on the consumer, one on SMEs, to understand their perception and awareness of different alternative finance models in the UK. And finally, in association with the British Business Bank, we conduct a series of in-depth interviews to understand the behaviors and motivations of lenders and borrowers. Now, in terms of the borrowers of the peer-to-peer consumer lending, so 30% of them only start borrowing in the last 3 quarters. And 60% of the borrowers surveyed, that's out of 6,000 people, started borrowing since 2013. So that shows the growth of the market as well as the momentum behind that growth. Now, in terms of their motivation for borrowing, and you can say better interest rate, definitely very important. But it is other factors are quite interesting. For example, I interviewed a lot of people who says more flexible terms is very important. And the particular mentioned there's no need for penalty if you have early repayments. As well as the ease of use, transparency, speed, and the customers and those borrowers are feeling more in control of their personal finances. And they are enjoying better services. So it's a blend of the factors actually motivate borrowers to borrow. Now, peer-to-peer consumer lenders are not lender of last resort. If you see this diagram, 59% of the people we surveyed have sought bank finances before they came to a peer-to-peer consumer lending platform, and 54% secured funding from the banks. So that corresponds to our primary data, which shows the majority of the borrowers on peer-to-peer lending platforms have A or A+ credit rating, so they are prime or super prime borrowers. So what about the social and economic impact of peer-to-peer consumer lending? 55% of people we surveyed out of 6,000 said their financial needs has been met after secured finance from peer-to-peer consumer lending. 33%, 1 in 3, said their personal finance situation has improved, which is quite significant. And 1 in 5 said they feel less stressed about their personal finance and much more in control. So those are sort of tangible, visible impact of a peer-to-peer lending in the UK. Now, this is interesting. We ask, how likely are you going to approach peer-to-peer lender first if you have a personal financial needs? 96%, overwhelming majority said they will approach a peer-to-peer lender first. Now, second question, we ask, what if bank offer you similar terms, similar interest rate? Would you still go for a peer-to-peer lender? 86% of them said yes, they will go to P2P. So that shows the peer-to-peer consumer lending platform are becoming the first choice. Now, in terms of the lenders, similar to the borrowers, 30% of them started lending within the last 3 quarters, and 2/3 of them started lending activities since 2013. Again, that shows growth, that shows momentum behind the growth. In terms of the income distribution of those lenders on peer-to-peer consumer lending platform, what's striking is from the income bracket of less than 15,000 all the way to the people who are earning less than 100,000, there's almost even distribution. Now that shows this industry is fueled by wide grassroots participation of lenders from all socio-economic backgrounds. 1/3 of the lenders on peer-to-peer consumer lending platform have income less than £25,000. So that's quite significant. In terms of age, it's sort of older crowd. If you look at the orange, that's people over 45 years old. So more than half of them are 55, over 50, over 65 years old pensioners. And it is also a highly educated crowd. So the dark green says people who have a bachelor degrees, 20% of them have masters or PhDs. Now, in terms of their motivation for lending, financial return is definitely a primary reason for them, but also knowing that their money is protected by a provision or safeguard fund. So that kind of a financial innovation really gives them peace of mind. Also, they like the freedom offered by the platform, so they can choose how much to invest and for how long. Now, in terms of regulation and ISIS, although 20% of them are unsure about regulation, nearly half of them says the current regulation by the FCA is either very adequate or adequate. And in terms of ISA, if there is a peer-to-peer lending ISA, 63% of them will say they will lend more. Now, in terms of peer-to-peer business lending, for the SME borrowers, the top 3 reasons for borrowing are to acquire expansion and growth capital, to access working capital, and to facilitate asset purchase. In terms of their profiles, so years of trading, although 26% of them have been trading less than 3 years, the majority of them have a longer trading record. And 37% of them have been trading for more than 10 years. Now that shows many established SMEs with a good track record are now using peer-to-peer business lending platforms. So that shows the growth and maturity of the market. Same story on the turnover side. So although most of their turnovers are above 100,000, less than $500,000, we're seeing 40% of them have turnover between 1 to 5 million and 3% over 5 million. So this is pretty much correlates to what's happening on the equity side. And many of you probably heard Chapel Dow, a public listed company, just closed a 4 million equity fundraising round on Cedars. So that shows the maturity of the markets with bigger deal size. One of the interesting questions to ask is whether peer-to-peer business lending can expand the pool of finance to SMEs. If you look at this diagram, the answer is yes, because 79% of people, SMEs we surveyed, have tried to secure banking finance, but only 1 in 4 of them, 20%, 22% of them, actually obtained banking finance. So that shows the peer-to-peer business lending can help to help those SMEs to acquire capital. Otherwise, they wouldn't be able to access. Now, in terms of the motivations for borrowing, they listed it's easier to get funded than traditional channels. But also, as the conference have seen, it's about speed, about ease of use, about transparency, and about having better services. So those are the other differentiating factors that sets the peer-to-peer lending industry apart from the banks. Now, on the social economic impact of peer-to-peer business lending, although we can't really credit all things wonderful happened or terrible happened since their fundraising on the peer-to-peer lending platform to peer-to-peer lending, but the majority of the SMEs that were surveyed have reported positive impact. 53% of them have reported increase in employment. They are taking on more staff. 71% have reported an increase in turnover, and 63% of them have said they have seen uptake in profitability. Many SMEs also said they have expanded the customer base, they have launched new product or services, and on a personal level, many of the interviewed, surveyed SME owners, entrepreneurs said they feel more confident and empowered. Interestingly, 1 in 4 of those SMEs who secured peer-to-peer loans then went on to acquire bank funding, and 4% of them have acquired venture capital. So are they become the first choice in terms of peer-to-peer business lending platforms? The answer is quite likely yes. 95% of them said they would approach a peer-to-peer lending platform first for their business finance needs. And when asked, what if the banks offer you similar terms and similar rate, 85% of them said they will still go for a peer-to-peer lender. In terms of the lenders' profiles, although the median lending portfolio is about 8,100, but you can see about 22% of them have lent more than £20,000, 9% have lent over £50,000, and 5% of them have lent over £100,000. And in terms of income distribution, we are seeing sort of a skew towards the higher end of income bracket, but it also shows the wide participation from people from all income and social background. So people who earn less than £15,000 still lending money to SMEs on those platforms. In terms of lender profile, quite similar, age skewed towards the older generation. And in terms of education, nearly 65% of them have bachelor degrees, masters, or PhDs. Their motivation for lending, primarily to make financial return, but also to diversify their portfolio, to have a control over where the money goes, and to access bigger and better deal flow. So what are they looking for when they pick out a business loan on the peer-to-peer business lending platforms? Well, they first will look at the interest rate offers, quite sensible, and then they will look at the risk rating, loan securities, and loan repayment information if it is on the secondary market. So on the whole, the lenders have shown they make very rationalized choices with a clear positioning on the risk and reward curves. And lenders are also diversifying. And you can see over 26% of them have lent over 100 loans on certain platforms. So our surveys also show they're not only diversifying within the platform, but on multiple platforms and across different models. The lender confidence is quite high. 53% of them said they will lend more in the coming 12 months. And when it comes to regulation, again, 65% of them say they will welcome a peer-to-peer lending ISA, and most people are quite satisfied with the current level of regulation. Now, so it seems to me that the existing lenders and borrowers are quite happy with peer-to-peer lending. But the challenge is how do you reach the rest of the population? As you can see, the general awareness of the alternative finance is quite high. 58% of the population aware of one or other forms of alternative finance. But the actual usage is quite low. So there is a challenging task for the platform to break that barrier. In terms of the different models, the peer-to-peer consumer lending and business lending score quite high in terms of awareness, around 38%. But the usage is actually very low, 5% or 7%. So when asked, why have you not used alternative finance, for those people who are aware of those activities but haven't used them, they say they think it's too risky, and they have insufficient information about how the platform works, how the platforms check the loans, and they have no idea about the regulation. So that, again, shows the challenge in terms of education, in terms of breaking that awareness barrier. So when we compare alternative finance platforms with the traditional banks side by side, they are pretty much neck and neck in terms of trustworthiness. And alternative finance platforms fare better in terms of offering value for money, and they are easier to use, more cost-effective. And the problem is when it comes to security and risk, traditional banks still fares better. And same picture for the SME sector. The awareness is relatively high, 44%, and the usage is relatively low, at only 9%. But in terms of the different types of alternative finance, peer-to-peer lending actually reaches quite high familiarity. As you can see, peer-to-peer lending is about 24%, invoice trading about 21%, compared to equity, debt, crowdfunding, or debt-based securities. When compare the alternative finance platforms with the traditional banks, the SMEs think the platforms are more willing to take on risks. They are more flexible. The speed is fast. But when you compare them with banks in terms of security and risks, the banks still wins. So that's the problem. So how do you break the awareness and perception barrier and make sure they understand the peer-to-peer lending can be secure and equally less risky? So as we have seen, that the peer-to-peer lending is actually about this intermediation of a financial process. But it is also about re-intermediation of financial relationships. Yes, it is about credit. It's about yield, data, modeling, logarithm, speed, and technology. But at its core, it's also about trust. It's about transparency, choices, relationships, and services. So it is an expression of modernity, with ancient roots in the moral economy. So from the data we have seen, the state of the peer-to-peer lending industry is strong, with very sound fundamentals. But yet the barriers of awareness and perception remain, and lenders and borrowers can leave the marketplace as fast as they gather. So I think it's too early to say this is the end for banks. So this is not the beginning of the end for banks, but the rather end of the beginning for P2P lendings. So the P2P lending industry can grow from strength to strength if it can keep providing solutions as well as services, continue scaling as well as innovating, keep growing in number as well as listening to the voice of the people. So what's the Cambridge role in this? We wish to continue to produce high-profile and high-impact industry research. In fact, we'll be launching the European Alternative Finance Benchmarking Report in 2 days' time with the support of 11 national associations in Europe. We are also working with the British Business Bank on their State of Market report on the chapter of innovative finance platforms. We'll keep generating high-impact, high-input, high-profile academic output as well as business output. Independent and interdisciplinary Cambridge Center for Alternative Finance is in active development. So thank you so much for your attention.
Anyone have any questions for Bryan before we break for drink?
Of the data that you have seen, which of the segments, say invoice financing or consumer loans and so on, is currently for investors, in your view, the most profitable after risk costs or risk cost estimates?
I would say if you're talking about finding the ideal position on the risk and reward curve, in the current situation, I would say peer-to-peer business lending, particularly towards the asset-backed, secured peer-to-peer business lending. The yield can be quite high, as high as 15–20%, but there are risks involved. Equity crowdfunding is doing well. I haven't mentioned that, but in this year, the equity-based crowdfunding will reach £84 million in the UK, which is a market leader in this regard, but that's also a high risk, high return. But I particularly like invoice trading because the long terms are quite short. On average, the term for invoice financing is only about 47 days. So if you have money, that's the quick way to make return.
Good day, Marvin Kodavamba. I saw from your presentation that the investors or the lenders skew older and skew male.
Yeah.
Do you have any insights into specifically why that is?
I think that there's a sort of misconception in the media, probably. Peer-to-peer lending and crowdfunding is for the younger crowd, millennium, and people who are Facebook generation. It's not. In the UK, it's a sort of older, probably boring population. But I think that's sort of more substantive in the sense that in the UK, in terms of peer-to-peer consumer lending and business lending, it has become part of a mainstream. So it's been accepted by the ordinary savers and pensioners. So I interviewed a pensioner who is 83 years old, and he said he's quite happy every month to receive £60 to supplement his pension. So those people, those retail investors, retail lenders are the lifeblood of peer-to-peer lending in the UK. And they tend to be an older generation with the cash to spare.
And the gender balance?
The gender balance, unfortunately, is still male-dominated paradigm. But on reward-based crowdfunding and on donation-based crowdfunding, we're seeing women are the leaders. And in terms of SMEs and entrepreneurs, we're seeing more of them breaking the barrier and start fundraising online. So I think in time, we'll be able to address that gender imbalance.
Okay, thank you very much, Bryan.
Thank you. Pleasure.